Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. The US Senate bans CBDCs, South Korea's market crashes 10%, and Wall Street races into tokenization. The Senate just passed a massive housing bill with an overwhelming 85-5 vote. But buried inside is a 4-year ban on central bank digital currencies. The measure explicitly prohibits the Federal Reserve from issuing a digital dollar through the end of 2030. After that deadline, Congress would need to grant explicit authorization for any CBDC initiative. The bill exempts private stablecoins like those from Circle and Tether. The administration has been clear about its stance since January 2025, when Trump signed an executive order directing against CBDC pursuit. This puts the US in stark contrast with Europe, where the ECB is preparing a digital euro, and China, which continues expanding its ECNY cross-border use. Meanwhile, traditional finance is charging into crypto infrastructure. Intercontinental Exchange, which owns the New York Stock Exchange, just partnered with OKX to bring tokenized NYSE stocks to OKX's 120 million users. The joint venture will operate as a US-registered broker-dealer, subject to regulatory approval. On the prediction market front, Charles Schwab is teaming up with Cboe Global Markets to launch S&P 500 prediction products using binary option structures with fixed return outcomes and simplified yes or no mechanics. South Korea experienced a brutal market crash. The Kospi index plunged nearly 10%, erasing approximately $800 billion in market value. Samsung Electronics and SK Hynix each lost more than 12%. The sell-off was triggered by regulatory admission that authorities rushed approval of leveraged ETFs tied to these semiconductor giants. 16 leveraged funds launched with $3 billion in assets, which quickly grew to $9 billion, with 92% retail ownership. When the market turned, forced rebalancing amplified the decline. The crash spilled into cryptocurrency markets. Bitcoin fell from above $63,500 to around $62,000, and crypto exchanges liquidated approximately $190 million in positions within 1 hour. Bitcoin ETF outflows are finally slowing. After 6 consecutive weeks of redemptions totaling nearly $6 billion, the latest week saw just $228 million in outflows. However, the US 2-year Treasury yield hit 4.21%, the highest since February 2025. Bitcoin is currently trading around $62,264. Ethereum's ETH just launched as an independent research organization backed by major ETH treasury holders. 5 former Ethereum Foundation researchers founded the nonprofit, securing funding from Ethereum co-founder Joe Lubin and others. Crypto industry groups are pushing Congress to pass the Tax Clarity for Mining and Staking Act without modifications. The bill would allow miners and staking participants to defer taxation on newly acquired assets until monetization. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.